first here, community reacts after SECs Gensler affirms BTC commodity status. The Securities and Exchange Commission's Gary Gensler caused a stir on crypto Twitter on Monday when he confirmed that Bitcoin is a commodity. This raised questions about the impact on Grayscale's proposed Bitcoin ETF and why Ethereum wasn't mentioned. SEC Chair Gary Gensler said on Monday that while many crypto financial assets share the key attribute of a security, he is only comfortable publicly labeling Bitcoin as a commodity. The remark sparked discussion about Grayscale's application to convert its Bitcoin trust into a spot-based exchange-traded fund, or ETF, which is expected to receive a decision from the SEC on July 6. While Gensler's remarks are positive for Bitcoin, they may not be enough to see Grayscale's Bitcoin spot ETF approved next week, according to James Seifert, an ETF analyst at Bloomberg Intelligence. Eric Balkunas, a senior ETF analyst at Bloomberg, commented that the probability of Grayscale's GBTC being allowed to convert to an ETF is very low, estimated at only 0.5%. Crypto Twitter also noted that Gensler did not mention whether Ethereum would be classified as a commodity, despite the regulator and the Commodities Futures Trading Commission, or CFTC, previously agreeing that the asset was a commodity. Nevertheless, Gensler's views on Bitcoin have been seen as a positive for the future of cryptocurrency. Bitcoin bull Michael Saylor shared the video to his 2.5 million Twitter followers, adding that Bitcoin is essential as a treasury reserve asset, which will allow governments and institutions to support it as a digital asset to grow the economy. Eric Weiss, founder of Investment Group, noted that Gensler is the second SEC chair to declare Bitcoin a commodity, making it unlikely that the classification will be changed in the future. Interestingly, despite the positive news for Bitcoin, its price has declined, falling from a 24-hour high of $21,478 to $20,635 at the time of writing. Ethereum has experienced a decrease in value from $1,234 to $1,171 over the past 24 hours as bearish market conditions continue. Up next here, crypto community confused as Celsius continues with weekly rewards. Twitter users in the cryptocurrency community were confused when the Celsius network continued to give out weekly rewards even though it had stopped allowing withdrawals 2 weeks earlier. As previously reported, the crypto lending platform Celsius paused withdrawals on June 13th after citing extreme market conditions amid the current bear market. Subsequent reports indicated that the firm was experiencing liquidity issues and may be heading toward insolvency, which could put users' funds at risk. Simon Dixon, CEO and co-founder of online investment platform Bank to the Future, tweeted his bewilderment to his 59,300 followers on Monday over receiving nearly $4,000 worth of crypto rewards, but being unable to withdraw them. Searching Celsius Still Paying on Twitter reveals many users questioning the lending platform. Some, like Crypto Styles USA, find it insulting that rewards are still being paid out while their crypto is held hostage. As Celsius' website is currently undergoing changes due to liquidity issues, the company is still advertising annual percentage yields of up to 18.63% on crypto deposits. Some have argued that these rates are unsustainable. Currently, the only asset offered in this promotion is Synthetics, the native token from the decentralized finance platform Synthetics. The top-tier stablecoins on Celsius have roughly 9% APY listed, while Polkadot and Polygon have offered APYs as high as 11.87% and 9.52% apiece. Celsius appears to be continuing to offer 10% rewards on first deposits up to $250,000, even though users are not able to withdraw funds from the platform at this time. While the exact fate of funds belonging to Celsius users is still uncertain, the firm reportedly hired advisors from a management consulting firm in advance of the possible bankruptcy of the company. Lawyers were also hired on June 14th to help restructure the company amid its financial difficulties. On Monday, it was rumored that Celsius CEO Alex Mashinsky attempted to leave the country via Morrison Airport in New Jersey, but was stopped by authorities. The story originated from crypto analyst Mike Alfred, but the firm has denied the accusations. We will obviously continue to keep you guys updated on Celsius. This is a huge story. So as we hear more, we will let you guys know. Up next here, Compass Mining loses facility after allegedly failing to pay power bill. Compass Mining has lost access to one of its main-based hosting facilities after the owner, Dynamics Mining, terminated the hosting agreement between the two. Dynamics Mining claims Compass failed to pay the required bills. On June 26, Dynamics posted a letter to Twitter stating that as of June 14th, the hosting contract between the two had been terminated. Dynamics alleged Compass had 6 late payments and 3 non-payments related to utility bills and hosting fees. In a follow-up tweet a few hours later, Dynamics alleged that the power consumption bills totaled $1.2 million and Compass had only paid around $665,000. It said that Compass claims to have given the money required for the bills, but Dynamics alleged that it was used to build other facilities instead. Cointelegraph contacted both Dynamics Mining and Compass Mining for comment, but neither responded by publication time. Compass Mining CEO Whit Gibbs said the company would fight this battle in court, not on Twitter. However, the individual responsible for the Dynamics account responded to Gibbs, saying that all Compass had to do was pay $250,000 for 3 months of power consumption, and that Twitter is the voice of their customer base, not the courtroom. Compass Mining is selling application-specific integrated circuit miners, specialized cryptocurrency mining devices. These devices come with the option to be hosted in our facilities located across the United States and Canada. We do not know what will happen to customer miners located at the facility. According to the hosting agreement with Compass, in the event of an emergency, Compass may rearrange, remove, or relocate customer hardware without any liability to Compass. This agreement includes a waiver of the right to participate in class action litigation or to receive remedies through a court. Instead, any proceedings must be brought forward by each individual customer. When Bitcoin prices fall and energy costs rise, cryptocurrency mining becomes more difficult for miners. This can create a challenging market environment. As of mid-June, the profitability of many older ASIC miners has dropped into the negative zone. Even some of the newer generation mining rigs are nearing or past their shutdown thresholds based on the current price of the asset. Yeah, mining is it's a hard thing right now. As Bitcoin mining profitability drops sharply from its all-time high, the volume of BTC being sent to cryptocurrency exchanges by miners has reached a 7-month high. According to reports, several public Bitcoin mining companies sold 100% of their Bitcoin output in May. So I'm curious to know how this is going to affect the market. If mining is not profitable and people really aren't making money, then they're not going to want to do it, obviously. So where does that leave Bitcoin? Is the price going to raise? Is the fees going to go up? I'm curious to know. Up next here, Tether CTO refutes stablecoin FUD as short sellers circle. Tether's chief technology officer, Paolo Ardoino, has confirmed that the stablecoin has been the subject of a coordinated attack by hedge funds looking to short sell the dollar-pegged crypto asset. On Monday, June 27th, the Tether executive responded to reports that hedge funds have been borrowing millions of dollars in loans to short USDT since the collapse of Terra Luna in May. He stated that these reports are false and that USDT is still a stable and reliable currency. Hedge funds have been allegedly trying to create pressure on Tether liquidity by selling large amounts of the token in order to buy back at a lower price when the market corrects. CTO levies accusations against hedge funds, claiming they have helped spread false information about the stablecoin. He states that these narratives, such as the coin not being 100% backed or having significant exposure to Chinese commercial paper, have been spread by its competitors over social media networks in order to damage its reputation. Ardoino took to Twitter to refute rumors and accuse those spreading FUD of harming the company. He stated that the company has been collaborating with regulators and has increased transparency efforts. He also mentioned the company's recent commitment to phase out its commercial paper exposure. He argued that Tether is a reliable investment, pointing to its recent redemption of 10% of its total assets within 48 hours as evidence of its strength. He affirmed that Tether has decreased its commercial paper exposure from $45 billion to $8.4 billion this month and plans to liquidate its commercial paper backing in the coming months. However, Ardoino's comments may not be enough to deter short sellers who are hoping to profit from a potential decline in the price of cryptocurrencies. At the time of writing, the price of cryptocurrency is just below 0.9989. The Wall Street Journal reported that Leon Marshall, head of institutional sales at Genesis, had observed an increase in trades to short Tether through the brokerage platform, particularly over the past month. Short selling is an investment strategy in which an investor borrows assets and immediately sells them in the open market, intending to repurchase them later at a lower price to pocket the difference. This strategy allows an investor to profit from the decline of a share or asset. Marshall stated that most short trades have come from hedge funds based in the US and Europe, with many becoming interested after the May collapse of the algorithmic stablecoin Terra USD. So, I don't know. I think USDT, I can't see what happened with Terra happening to USDT. Obviously, nobody knows. It's unfortunate that people try to, paint a company in a bad light just to profit from it, but it is what it is. Up next here, Bitcoin mining revenue mirrors 2021 lows right before BTC breached 69K. Although mining has become a costly affair as Bitcoin approaches a $20,000 range after 1.5 years, history may repeat itself with another epic bull run that previously helped Bitcoin reach an all-time high of $69,000. This would be good news for BTC investors. The miner's income is directly impacted by changes in the price of Bitcoin. In June 2022, the total mining revenue dipped below the $20 million range, with blockchain.com data recording the lowest dip of $14.401 million on June 17th. The recent decrease in Bitcoin mining revenue was last seen 1 year ago when the total value plunged to $13.065 million on June 27th, 2021. This was during a time when BTC was trading at approximately $34,000. However, after that, Bitcoin experienced a 5-month-long bull run, which was due to various pro-crypto initiatives, such as El Salvador's BTC acceptance and crypto-friendly regulations across the world. Despite the mixed sentiments about the crypto ecosystem's recovery, small-time investors have increased their investment efforts amid the bear market. They are fulfilling their long-term dream of owning one full Bitcoin. Global recession, geopolitical tensions, falling crypto economies like Terra, and an ongoing pandemic currently hold the Bitcoin ecosystem back from unleashing its true potential. A report by crypto-focused financial services firm Arcane Crypto reveals that several public Bitcoin miners have the potential to survive the ongoing bear market. The key to survival for Bitcoin miners lies in the delicate balance between revenue and operating cash flow. Based on the report, Argo, CleanSpark, Stronghold, Marathon, and Reut seem to be the most promising and sustainable miners during this crypto winter. Furthermore, Core, a major player, has managed to almost equalize its operational costs with its total revenue. Compass Mining lost one of its main base hosting facilities after failing to pay the electricity bills. This caused significant disruptions to the company's Bitcoin mining operations. Dynamics Mining alleged that Compass Mining has 6 late payments and 3 non-payments related to utility bills and hosting fees. Dynamics Mining stated that all Compass Mining had to do was pay $250,000 for 3 months of power consumption. And we talked more on that in detail at a previous article, but that is good news. I mean, do you guys agree with that? Do you think that Bitcoin mining is going to ramp up? Do you think it's not? Do you think that this is going to cause another bull market? I don't know. And last but not least here, Unizen CDeFi Smart Exchange secures $200 million investment from GEM. Unizen, a cryptocurrency exchange, has received a $200 million investment from private equity group Global Emerging Markets, or GEM. The funds will be used to expand Unizen's business and ecosystem. Unizen stated on Monday that rather than receiving the $200 million in funding all at once, the investment will come in the form of a capital commitment. Some of the funding will be released up front, with the rest to be provided later based on achieved milestones. Unizen did not disclose the specific criteria it needed to meet to receive funding. Unizen is an exchange that combines features from both centralized exchanges and decentralized exchanges. It runs on the BNB chain, formerly known as Binance Smart Chain. The goal of Unizen is to attract both retail and institutional investors by finding and aggregating the most cost-efficient trades across different exchanges. This includes CEXs like Binance and DEXs like Uniswap. GEM is an alternative investment group with a focus on emerging markets. It has selected Unizen with the aim of being involved in the technology that will shape the future of finance. Unizen has announced that it will use its recent investment to expand its team, improve its innovation and marketing pipeline, and speed up the implementation of its trade aggregation ecosystem. The company also hinted at an upcoming investor token release update for early July, though no further details were provided. Unizen's ZenX Labs business is a seed DeFi incubator that invests in and supports decentralized projects by providing technical expertise and assisting with compliance. ZenX Labs has announced that it will be launching a small satellite into orbit aboard a SpaceX rocket, with the mission being funded entirely by Dogecoin. The launch is expected to take place sometime this year. For GEM, its investment into blockchain-related business is another way to contribute to the development of new and innovative applications. By providing funding to Kaj Labs, GEM is enabling the development of Lithosphere, a platform that uses artificial intelligence to power cross-chain decentralized applications. This is just one way that GEM is working to bring new and exciting technologies to the market. So that is all we have for you guys today. Thank you so much for watching. Make sure to like, subscribe, hit that notification bell, leave a comment on what you want to see in a future video, and we'll see you next time.